All right, Markets and Mandate, and it's always a pleasure when you have Mark Mobius, Chairman of Mobius Emerging Market Opportunity Fund, joining us on the show. Mark, so nice to have you back, my friend. I always ask you, which part of the world are you joining us from?
I'm now in Dubai, United Arab Emirates.
All right, fantastic. How is Mark Mobius positioned in his India portfolio ahead of the election cycle?
Right now, I'm very focused on the stocks that are involved in the roads and railroads and all kinds of infrastructure, number one. And number two, stocks that are involved in the steel and materials sector. So those two sectors, I think, are very interesting now. And I believe going forward, India is going to be expanding further in the infrastructure area. So these companies should do very well.
On the election cycle in India, what is your understanding? What is in the price? What are markets pricing in? And what could create more upside for the market?
I think there's a possibility that there'll be some disappointment if Modi does not get the majority in Congress and the amounts that the votes that he gets is not as much as people expect. So there could be some disappointment in that, but it will be temporary. And I think at the end of the day, Modi, of course, will still be pretty much in control, and he'll be able to continue this incredible growth program that he has for the country.
Mark, when we spoke to you 2 years ago, you had only 3 stocks in your India portfolio. One was an IT company, one was APL Apollo, and one was again from the consumer space. But now I understand that you increased it to nearly 12 stocks. Is that correct?
That's right, yes. We're increasing because we believe that the opportunities are tremendous.
Why have you bought stocks like Bharti? Are you bullish on the telecom sector or it is something else?
Yeah, by the way, that's another sector that I failed to mention. I think the telecom sector is looking very interesting. Vodafone idea is particularly interesting. We're looking at that as well.
Did I hear you say Vodafone idea, Mark?
And also, I was mentioning Vodafone looks interesting. And in the power sector, by the way, I also wanted to mention that the power sector is particularly interesting. Such stocks as Ratan India, that kind of stock are going to be very interesting going forward.
Ratan India in your portfolio, I can also see there is Vari Renewables. This stock is done exceedingly well. Any reason why you've added Ratan India and Vari Renewable in your portfolio?
It's all about growth. At the end of the day, stocks like this are going to benefit from the overall growth in the economy.
I don't see too much of banks in your portfolio. I mean, the India romance, if I may use that word, has always been to buy into good private consumer-strengthening banks. But I don't see an HDFC Bank or an ICICI Bank or for that matter, Axis Bank.
Yeah, generally speaking, we have not gone into banks because of the lack of full transparency. I mean, it's not only true for India, but globally, we find that it's very difficult to know what the banks are having in their portfolios, what are the amounts of bad loans, et cetera, et cetera. So the opaque nature of bank balance sheets is something that deters us. But that doesn't mean that we will avoid banks completely. But generally speaking, we find it very difficult to analyze such companies.
When you come on television, and especially on ET now, you would imagine that the world tunes in to hear you. And the minute Mark Mobius is talking stocks, the curiosity is why. Please get more, idea of what is the thesis here. Since you mentioned Ratan India Power and Vari, they both are very unique companies. One is into EPC stroke renewable. Ratan Power is the traditional power utility company. So are you betting on both the ends of the Indian power play?
Yes, both, because India needs more and more power, and it's going to come from coal as well as from renewables. I know people would like to get away from coal because of the environmental problems, but at the end of the day, you can't get away from coal. And that's not only true with India, it's true with countries like South Africa and other countries like that. Of course, everybody is getting into renewables, and the prices of screens, of renewable screens for solar is going down. But at the end of the day, it's just not enough to meet the incredible needs that India has. You must remember, if you have an economy that's growing at 7%, your power needs are probably going to be double that in terms of growth. So this is a sector that is going to be going from strength to strength in every area of material.
Mark, just want to get back to the point that you were making on telecom, because many believe, yes, I mean, surely Bharti is at an all-time high and so is Vodafone. But, you know, it's all linked to ARPUs and who's going to sort of bell the cat first. And with the big daddy like Jio, just everyone's sort of in the waiting. What do you have to say about that?
You know, at the end of the day, yes, no question, the competition is very, very keen, but the demand is also very keen. So regardless of which player you're looking at, they all are going to benefit from the incredible growth that's taking place. And of course, they're going to have to make investments to meet that growth, but the money is there and the demand is there. So they should be able to make good on these investments.
Interesting. You know, the other thing I'm very curious to know about is the point that you were making on railways, right? Because again, valuations and the kind of exuberance that you're seeing on these some of these you know, sectors is kind of a little scary. Tell me, is that a long-term call that you have, and are you not looking at valuations versus the growth story that this particular sector actually projects?
Well, what we're doing is looking at not only the operating railways, but the finance. India Railway Finance would be an example of the kind of thing we want to look at, and the people that are supplying the equipment for railways, the rails, the locomotives, et cetera, et cetera. So these are the areas that will be more interesting rather than just simply the operation area of the railways.
And need to look at the entire supply chain. Hi, Mark. This is Anisha also joining in the conversation. But what do you do about the valuations in the public sector entities? Because, yes, they have seen a massive re-rating in the last 12 months. And in all certainty, it seems like the current government is going to come back to power. Do you expect this momentum really to continue? Or do you think the bulk of the rally and the value has already been tapped into?
There's no question there will be a correction. The market has gone up so far and so fast and for such a long time. We are due for a correction, and a correction of 15 to 20% is normal. This may be on the back of the election. If there's disappointment about what Modi's election results are, you may see correction. But that does not deter from the overall growth that we're seeing in India and the recovery. So if there's such a correction, it would be a great time to be buying. But nobody can time it. That's the problem. So if you want to be exposed to the market, you've got to be exposed and you've got to be in the market, but maybe keep some cash on the side in the event of a correction where you can buy at much lower prices.
For that correction and keeping the buy list ready, could you give us perhaps some insights into what that buying list looks like? Or if not, at least the segments, are you looking at more large cap names because they have underperformed? Because right now your portfolio is a lot heavy in terms of small cap and mid cap names. Are you going to tilt it towards large caps as well?
Yes, we're going to be looking at large caps going forward because some of these large caps have lagged behind the small caps. We've seen incredible growth in the mid and small caps, and now it's time for some of these large caps to catch up. As I mentioned, the whole infrastructure area is particularly interesting. And in the power sector, don't forget hydro. If you look at a company like NHPC, this could be a very, very interesting entry into the hydropower area. By the way, one of the most interesting aspects of these companies is that they're not only exposed to growth in India, but growth globally. Many of these companies are building plants and having operations in other parts of the world, particularly in emerging market areas where Indian companies can do very, very well.
Quite interesting, Mark. But, since you've talked about large caps, I'm curious to know what within large caps, those that have not moved, is it more a bottom-up approach that you're going to be following or buying more of the same, some of the infra and financials related themes?
Well, it always has to be bottom up. You have to look at the fundamentals in the first stage, but don't forget growth. At the end of the day, it's about growth. You can see a stock that looks expensive on a price earnings basis, but is growing at such a pace or is expected to grow at such a pace that you'll have the opportunity to have incredible returns going forward. So that's what we look at. We look at the growth trajectory and the earnings trajectory going forward.
But when you talk about bottom-up stories, Mark, I mean, the most obvious trade seems to be private banks and select few, not all. But there's got to be a reason why some of those select private banking names like a Kotak or HDFC Bank have underperformed for so long, and especially HDFC Bank. So are you betting on those names as well? Or would you be if there were to be a correction?
No, I think one of the problems with the smaller banks and one of the risks is that when you have such a buoyant market, many of the clients of these banks are maybe heavily leveraged or too heavily leveraged and have holdings in the market, which has gone up quite a lot. And if something happens in the market, these small banks will be the first to be affected. So you have to be very cautious. And by the way, that goes back to what I was just saying, the opaque nature of bank statements, bank balance sheet statements is a real problem in trying to assess what the risks will be in the event of a market downturn.
But to the point on large cap private banks, would you be a buyer there if the market were to fall further?
Depends on the price. It all depends on the price. As I said,
performing ones, because you said it's a bottom-up story that you're looking at, Mark.
Yes, the lack of transparency, as I said, is a problem. But if you see a really big decline in some of these banks based on just the asset value of these banks, it may be interesting to go in and enter, but not at these levels.
Some of those bankers are listening to you and try and make their balance sheets a little more transparent so that it becomes easier for investors like you to kind of invest into that. But I want to shift focus and talk about the India demographics a bit, because I remember in one of the earlier conversations you were talking about how you're betting on dream folks because you're expecting the affluent India to travel more, and tourism is a theme which is picking up. But of late, in the last 2 to 3 months, the noise around rural recovery has become a lot more stronger. So whether it's FMCG companies, paint companies, name any, they're talking about rural recovery now. Would that make you tilt towards auto companies, FMCG a bit?
Yes, of course, the real issue and problem facing Modi and the government in general is the large unemployment of the youth in India. And this is something that has to be tackled very aggressively. And of course, the growth story is there. The country is growing at a good pace. But there has to be a lot more opening of investments so that the youth can be employed. And this means manufacturing. So the government has to loosen up the restrictions and allow more and more manufacturers to come into the country so that this youth can be employed. This is something which would be in terms of inviting Chinese companies, American companies, European companies, and so forth, but making it easy for them to come in and employ more and more people.
Manufacturing vertical, all of these names like Dixon, Sirma, Keynes, Amber, etc. Is this something that you're watching out for? Anything on the radar?
Yes, we're looking at that. One of the interesting aspects of this entire employment situation, of course, is AI and the outsourcing problems that you're facing when you have AI applied to some of these call centers, for example, where you don't need as many people. So this is something we have to look at more carefully. That's why I emphasize the manufacturing sector, which would be something where you can apply a lot of people to work in whether it be semiconductors, whether it be electronics, whether it be garments, whatever requires lots of employers.
Okay. I wanted to glean out a bit, Mark Mobius, I beg your pardon, because overall we have seen that there has been a shift towards China as well, because the valuations there were fairly comfortable. For you, I see that it's still one of the least preferred countries in terms of your geographical portfolio breakdown. What's the thesis here? Are you looking at perhaps increasing the weights in China, and even US for that matter is fairly underweight at just 9%?
Yes, we are looking at China again now. And you've seen that the Hong Kong market has had pretty good recovery. I think it's about up 20%. So there's no question that we can look at China at this stage, but emphasizing government-related companies in China, because the Chinese government, as you know, has been putting more and more emphasis on government companies rather than the private sector. That, of course, entails a lot more risk and a lot more problems that you have to look at very carefully. But generally speaking, I would say the tech sector is something we have to pay a lot of attention to in China because of the growing emphasis by the leadership to improve technology, particularly in semiconductors, so they can meet the challenge that the US is imposing on them with the restriction on export of software and hardware in the semiconductor area.
I just want you to take a little bit of a panoramic view here. How much of the rally that we're seeing right now, and by the way, today we hit an all-time high on both the Nifty as well as the mid-cap index, how much of it is an India-specific story? Because world markets at large are doing good.
Well, that's true. If you look at the US market, it's done very well. It's done as well as the Indian market. Some months the Indian market outperforms the US market. Other months, the US market outperforms. So there's no question there is lots of steam left in the global market, and you're seeing lots more interest in equities globally, particularly in the US. And of course, that helps India as well, because if people are making a lot of money in the US, they want to diversify globally. They want to put their eggs in more baskets. And one of the most important baskets, of course, now is India.
The other standout factor also, Mark, is the fact that India has seen an exodus of FIs, right? I mean, you've had a year-to-date sell figure of $3.3 billion at a time when the markets are doing that well. What explains that?
Well, some of that is hedge fund activity, where they're moving in and out of these markets, but I wouldn't pay too much attention to that. I think at the end of the day, you're going to be getting a lot of long-term money, not only in the equity market, not only in the fixed income market, but in direct investment in manufacturing and distribution and other areas. India is a huge market, as you know, and there are lots of opportunities for global investors, and they're going to be taking advantage of that opportunity.
Mark, I also wanted to get a sense from you, where are you booking profits, if at all? Because I remember last time your portfolio did have names like Metropolis as well, Dreamfolks, 361. Anywhere that you've booked profit, even C Infosystems and Persistent for that matter?
We're not booking any profits because we have more money coming in, so we have to put it to work.
So how much cash are you sitting on right now? Is that a problem? Where to deploy?
No, not a problem, because the markets are very deep now and we can see lots of opportunity, not only in India, but in other parts of the world.
Okay, what's the view on IT? Because you were just talking about it's important to mark and monitor how AI really shapes up and the disruption that it's causing. Within all of that, do you think Indian IT will be able to weather the storm and turn it into an opportunity for themselves?
Yes, definitely. As you know, India already is so important in the software area. India exports software all over the world. Now it's time for India to become a major semiconductor manufacturer and a major manufacturer in electronics generally. And in order to do that, of course, they've got to allow more and more foreign companies to come in to provide the know-how and the manufacturing expertise. That's very, very critical for India. Of course, it's already there in many sectors of the Indian manufacturing sector, but at the end of the day, you need more and more input from companies from Taiwan, China, the US, Europe, etc. And that, of course, is going to happen as we go forward. So I believe India is going to be a big, big center for manufacturing of electronics and semiconductors generally.
Mark, I mean, we all know that, markets, even in the peak most of bull runs, will have corrections, right? But for India,
Exactly.
what do you think will cause that correction? Will it be a global event? Or do you think, given that we're already stepping into the election verdict, which is as soon as June 4th, with an all-time peak on pretty much across indexes, do you think that event itself may actually call for some profit-taking and a serious bout at that?
I think both of those events, one of course is the election, some disappointment about the election, but the other would be a downturn in the U.S. market, which is quite possible. The U.S. has been performing very, very well. You've seen some of the tech stocks not doing too well recently, so there's a chance that you'll see a downturn in the U.S., which of course will carry on to not only India, but other markets around the world. So a correction is due, but the question is when.
Is due, when you can't time it, and what would cause it is a bit of a black box. But Mark, what's your own expectation as far as what could be the return from India over the next 3 to 5 years on a compounded annual basis? Because Nifty has been doing somewhere between 11 to 13%. Do you expect it to accelerate, be in similar range, or slow down a bit because the base has become heavier now?
Over the longer term, I believe you're talking about 14 to 15% returns for India. Generally speaking, as a rule of thumb, you can double the GDP growth rate to the market. So India growing at 7, 8% in real terms means that the stock market will probably return 14, 15, 16% going forward.
Mark, I recall, you were the first one, I think 3 or 4 odd months back when you last came on ET Now to say that, it's a given that it is going to be a continuity of the current government. Are you nervous about that now? Or you're still pretty convinced that it's going to be PM Modi once again?
It will definitely be Modi again. The question is whether he can have control of Congress and have the ability to change the Constitution. That's the big question mark. And of course, if that does not happen, then there might be some disappointment. But I think, it's already being fed into the price. People are already talking about it. They're already thinking, well, maybe it could happen. And therefore, they're making investment decisions on that basis.
Okay, and Mark, you're joining us on a day when the Indian markets have hit a fresh record high, whether it's the Nifty or the Sensex. Sensex is already at around that 75,000. And I recall having this conversation or hearing this conversation earlier when you talked about Sensex hitting that 1 lakh mark. Do you expect it to happen sooner rather than later? Let's say next 12 to 18 months, Sensex could be at 1 lakh mark?
I wouldn't say the next 18 months, but as I mentioned when I first made that prediction, within the next few years.
Importantly, what should be the expectations from the Indian markets, and where all are those pockets of growth that you're witnessing? Clearly, railways, infrastructure, these are some of the big themes that he's talking about. And of course, his investments in India have increased from 3, 4, which were there earlier, to almost a dozen.
And so many small and mid caps, which is why he says that if at all the markets were to pause or correct, it'll be large caps then. But we'll take a very quick break on that note. Come right back. We'll have our chartists and fundamental experts as well join in to discuss the market.
If you like this video, then like, share and subscribe to ET Now.